We need the kryptonite to the short selling practice, but how? How? Hey Platoon, my name is Andrew, and I'm here to give you guys a little quick peek at this DD from you, Vipper of VIP99. Give it a big like, give it a big upvote so that you guys can see it in the source down below, and give this video a like and watch until the end, because we need to understand what is the inverse transaction of a short sold, and how Blackrock is going to use it to crush the hedge funds. So without further ado, let's actually zoom on down to too long didn't read to give you guys the full picture first. Too long didn't read. Share recall is the fundamental inverse market transaction to a short sell. Blackrock slated trap, and it's about to unload on the short sellers. Get ready for a big correction. Well, get ready for a big correction is the headline of this video, and now we're going to be able to, not very long, right? It's just going to be a walk in the park of understanding what Blackrock has in store. Let's dig in. A lot of talk in the DDs recently on how this situation may have been a big trap that Blackrock set for the hedge funds and Citadel. Simple logic, really. Story goes like this. Number one, Blackrock is historically a long positioned asset manager. 2015 to 2019, Blackrock sees hedge funds short brick and mortar retail to bankruptcy. What can we do about this? Is it damaging our assets? Is it an opportunity for us? Spoiler alert, yes. 2020 COVID-19 hits. Citadel and hedge funds go into a feeding frenzy with shorts. Blackrock, let's try something. Loan the hell out of our shares to give to these people. BR proceeds to suck up millions of shares at a bargain and keeps loaning them out like giving a line to a fish that you've already hooked. Blackrock, the hedge funds are playing right into our hands. Wouldn't it be a shame if a millennial became the chairman of a CEO of a company that is historically loved by millennials? Now we're really running into speculation zone, right? So we don't understand what's going on behind the scenes with Blackrock. It's just something that we're going to have to be able to, at the very least, take with, that's right, a spoonful of salt, right? This is whenever we have Blackrock talking and thinking about what we should try, this is going to be, once again, titled as an opinion piece. At the very least, this is giving you a little bit of a perspective on the different players in the field. If you guys didn't know that Blackrock was one of the major players, now you're going to be able to understand exactly what they have on the table here. I wouldn't be surprised if BR was doing something demographics analysis on us Redditors, especially WallStreetBets in fall 2020, to see what the mood on RC was back in 2020. They discovered we grew up buying games at GME. They discovered we hate hedge funds just as much as them. They discovered RC would be the perfect thing to turn around their beloved GME asset. I would like to counter this and say that somebody has figured this out, right? It might even be us. Democracy, it rules, right? We are the group of people here that love Ryan Cohen and love GME. It might have been the will of the people. We just kept asking GME to do this, and that was the force that brought it to fruition, right? At the end of the day, I don't think GME was that bullheaded to ignore millions of, well, not millions, well, millions of requests, but definitely from tens of thousands, hundreds of thousands of supporters. Look at AMC's short interest. It went up a lot. Yes, we covered that yesterday at the end of the live stream, but we will look at it as in a little sec. So, Steven, thank you for that. Hedge funds doubled down, except that they add to their firepower not only the lent out shares from long positions, but also brokers. Borrowing shares from brokers will dumb retail on margin. Cough, cough, Robinhood, cough, cough. Of course, Vlad and Robinhood are Citadel's puppets. Probably didn't even realize that they're being used by Citadel. This is something that, this is a theory that I've talked about before as well, is that Vlad really felt like he was the one holding the bag during the congressional hearing. And it really doesn't feel like that was, you know, that's not really that fair. Vlad is like, everyone, right? I was here listening to Citadel, and Citadel's like, what? No, it was Vlad. So they really threw each other under the bus here. Citadel uses payment for order flow from select retail investors to simulate model on probability basis the behavior of all retail. Even 10 to 20% of retail payment for order flow would be enough for them to simulate and extrapolate this data to all retail. They know your hand, they keep pumping it down. This is the issue. You guys are like, hey, how are they so good at being able to press down the price when these positive catalysts continue pumping up, right? We're looking at GME today for the first time with its VWAP actually reflecting on the price action here. The VWAP moves exactly tandem with the price growth here, and then with this fall, it's all basically almost at the exact same level as before, but look, no volume. This is just the this is basically proof in front of us, is that we saw that we got a little too ambitious, and then the volumeless, the traceless attacks, different kinds of attacks like conversions, short attacks, they come up and poof, the price gets hurt, but the VWAP stays above. So an important point to note there. Reddit and retail smell something is up and jump on the stock. Although we didn't quite understand the full picture yet, Blackrock says, uh-oh, retail turned this play from a savvy asset management move to a powder keg. Retail is vacuuming up all of the short sold shares. Uh-oh, we didn't plan to do this. This could get ugly. We created a monster. Blackrock really sitting down and being like, created a monster here. Well, as of right now, this has still been an opinion piece, but we do want to talk about the actual mechanics of why the recall is the inverse market transaction. So to London read, short selling has no inverse market transaction. Buying is the natural inverse to selling. Calls are the natural inverse to puts. See the link below. So what is the inverse to short selling? Long selling? Short buying? Never heard of those terms. Don't think so. Then it hit their brain and gained a few wrinkles. It's recalling lent out shares is the inverse market transaction to short selling, right? So here is what they think mathematically. This is some game theory. This is some theory crafting here. Selling short means that you borrow a share from a share owner for a fee. Then you sell that share on the market. Thus, the shorter effectively has two IOUs. One, to deliver the share back to the lender, and two, to deliver the share to the person they sold it to. This creates an induced supply of shares. The lender thinks that they own a share, they do, and the person who bought the share from the short seller thinks they own a share, they do. But there's only one share. This is a great explanation of the dog food analogy that I was doing in the very beginning, right? How to make it seem like that there are just more shares that exist. Borrows one from someone and then give it to another person. Thus, the market responds to the additional share supply pressure by dropping the price, supply and demand. If every market transaction has a yin and yang, what is the yin to short seller's yang? Well, if short selling created induced supply of underlying asset, you need a transaction that creates a induced demand. What is that transaction? Total recall. Let me explain. And then they explained it, and then they edited it, and they said this comment may require additional analysis by others to confirm. They're open to feedback on their price. As rightfully pointed out, this is one of the themes you might be seeing, is that they're very excitedly creating theory, which you should as well, right? If you're creating your own DD, that would be also an opportunity to show the world your brains. This is one of the opportunities for them to, take constructive criticism, be peer reviewed, and realize that they were off the mark by a little bit. But recalling a share is on the other side of selling a short. So this is one of the ways to be able to unravel the ball of recursive and naked shorting that has happened in the GME and AMC saga so far. So what this means in their prediction, nobody could give Blackrock a hard time for this fundamental market transaction share recall. This is 100% the short seller's fault, right? As a reminder, eventually we're gonna have to point fingers. We've already covered a couple of videos on who's going to jail, who's actually in trouble. We even talked about it with Trey. Blackrock always planned to recall this month. All the cryptic tweets to point to this. Reddit smelled what was going on and jumped on this. Hedge funds doubled down, turned this smart investment play by Blackrock into a market-threatening powder keg. Upon realizing the powder keg this play is turned into, Blackrock told the DTC to get their ducks in a row and prepare for the nuke to drop. DT said okay and instituted new rules. Blackrock keeps the borrow rate low and price in check while the ramparts are shorted up. Now, this is actually an interesting theory, is that there is someone on the other side of the DTC giving this private organization cartel leader a list of rules that they want. But then in that sense, then Citadel can buck back and say, this is not something that I want to happen. It's more interesting to think about the anime GME of the long hedge funds and then the short hedge funds trying to fight against each other. That's a really fun idea to think about. Blackrock increases their cash reserves, waiting to pounce on an inevitable market dip while they cannibalize Citadel and the hedge fund corpses. The hedge funds are in such a hole that either the share recall would trigger the mother of all short squeezes, or the margin called hedges trigger it when the high borrow rates hit. Either way, it's a massive chain of collateral dominoes that are about to fall and will crush the hedge funds and Citadel. Is Blackrock our friend? Well, for now, they might be. And forever, you will be a friend of the show. Thank you guys for watching the show from beginning to this part. And I appreciate those of you who have also brought in a little bit extra support to the show, from Moon Platoon to the Meatball Space Legend tier to the Gorillionaire tiers right there. Thank you guys for supporting the show, and we will see you in the money next time.